Hello, everyone, and welcome to the December Market Compass. Now, as we head into year end, perhaps to enjoy some well-deserved holiday cheer, we're all hopefully reflecting on a successful 2023 and looking forward to 2024. Now, in this edition of Market Compass, we'll focus on our outlook for 2024, what we see happening in the economy, with the Fed, with inflation, and of course, how do we think about portfolio positioning as we enter the new year? You can go to edwardjones.com to watch the full episode. What happens with economic growth? The U.S. economy was quite resilient in 2023. Economic growth was at or above trend levels of 2%. Now, in 2024, we expect the U.S. economic growth to remain positive, but soften in the first half of 2024. Growth rates will likely fall to below 1.5% annualized. Now, we do believe that somewhat weaker consumption, lower government spending, and a cooler labor market will translate to slower growth. The consumer faces some challenges heading into 2024. Those include declining excess savings and rising credit card debt. In addition, we believe some loosening in the labor market may put downward pressure on wage gains. But on the positive side, a slowdown in growth could potentially support lower inflation and less need for further Federal Reserve tightening. Now, as we look toward the second half of 2024, we do expect the economy to gradually accelerate once again. We believe lower inflation rates, a Fed that is possibly signaling rate cuts, and better earnings growth will lead to improving economic growth later in 2024. And remember, markets are forward-looking. They can start moving higher even before economic growth stabilizes and improves. Does the Federal Reserve cut rates in 2024? Now, at the core of our outlook for the markets is the trajectory of Fed policy. We believe that after the most aggressive tightening campaign in 40 years, the hiking cycle is now complete. The Fed will likely proceed with caution, perhaps even signaling an extended pause and keeping that Fed funds rate at 5.25% to 5.5% early in the year. But we believe that easing inflation pressures, a cooling labor market, and a slowdown in growth will likely pave the way for interest rate cuts in 2024. In our view, the Fed will likely cut more than the 2 cuts it outlined at the November FOMC meeting, but perhaps less than the 5 to 6 cuts that markets have priced in. We believe that if the Fed funds rate is at 5.25% to 5.5%, longer-term neutral rates are closer to 2.5% to 3%, and inflation is moderating, then there's less need for the Fed to remain this restrictive. All this to say, we see a Fed rate cutting cycle emerging in 2024. Can inflation continue to moderate? The trajectory of inflation is another key driver of our outlook in 2024. Now, we've seen progress in 2023 thus far. Headline CPI inflation in the U.S. has fallen from a high of 9.1% in June of 2022 all the way down to 3.2% at the November reading. Core inflation also moved lower from 6.6% to 4%. Now, while the last mile down to the Fed's 2% target may be gradual and even a bit bumpy, we do see core inflation heading towards 2.5% in 2024. Now, there are a couple of reasons for this. First, the shelter and rent components of inflation, which make up nearly 40% of the basket, have softened in real time and typically show up with a lag in the CPI figures. So we believe this will put downward pressure on inflation in the months ahead. And secondly, we believe wage gains will continue to moderate. That will help cool services inflation as well. So overall, we see the downward trend in inflation that began in 2023 continuing in 2024. What does this mean for your portfolio in 2024? So after solid returns in 2023, we do see opportunities in both equities and bonds for 2024. Now keep in mind, bear markets like the one we saw in 2022 are historically followed by positive returns. In fact, often these periods can last for several years. So how do we think about portfolio positioning as we head into the new year? For stocks, if a key theme in 2023 was narrow leadership with large cap technology or the so-called Magnificent Seven driving much of the gains, then perhaps we would view 2024 as the year when laggards play some catch up. So we recommend complementing growth investing with some of these lagging assets. That includes cyclical and value sectors, as well as small cap stocks, which could play some catch up in 2024. Now, with artificial intelligence still in the early innings of multi-year growth, we still view the space favorably, but we do see diversification beyond technology more critical to portfolio returns in 2024, especially as valuations are more favorable outside of these areas as well. And in bonds, we do recommend complementing your cash-like investments, including CDs, money market funds, with longer-term investment-grade bonds. These bonds can help you lock in these historically high yields for a longer period, and they may also appreciate as the Fed makes further progress towards its 2% inflation and over time cuts rates as well. Using volatility to your advantage. So as we look ahead to the next 12 months, we do expect 2024 to be a positive year in markets, but like any other year, it will have its share of volatility as well. We believe balance and diversification in your stock portfolio and bond portfolio can help you position to maximize return potential for the year. And this is also where your financial advisor can come into play. They can help ensure you have exposure in your stocks and bonds that is tailored to your specific financial goals and risk tolerance. At the end of the day, you can use market volatility to your advantage to rebalance, diversify, and add quality investments at better prices, ultimately to meet or exceed your long-term financial goals. So if you are interested in our 2024 market outlook, head to edwardjones.com to read the full report. And thank you again for your viewership. We wish you all a very happy and healthy holiday season, and we'll see you back here in the new year for the January Market Compass.